Good morning, ladies and gents. How are we all doing today? I hope we're all good. So again, I just came with another live trade recap of the trade we just took just now. So today we used support and resistance. And again, we're continuing with showing live trade examples with the candlestick trading Bible, which we went through in previous videos. So today I was looking mainly at support and resistance levels, and this topic falls under market structure. So we are going to quickly jump to page 58. Okay, so we just go through it quickly, then I'll show you the chart example and the trade results. All right, so again, like I said, it falls under market structure. If you haven't gone through that, you need to. Let's see, 58, 58. Okay, all right, so support and resistance. Support and resistance are proven areas where buyers and sellers find some equilibrium. They are major turning points in the market. Support and resistance levels are formed when price reverses and changes direction, and the price will often respect the support and resistance levels. In other words, they tend to contain the price movement until, of course, the price breaks through them. In trending markets, support and resistance are formed from swing points. In an uptrend, the previous swing point acts as a support level, and in a downtrend, the swing point acts as a resistance level. See the example below to learn. So in terms of time frames, it will depend with what type of trader you are. So for this example, the trend is shown on the daily time frame. But when you understand price, you can simply use the same concept on any time frame, depending with your strategy as well. So you can see this is pretty much simple. We get a level here, then price breaks that level. That level which was broken, price simply comes back to retest. And this swing high, again, you just put your line there. If it gets broken, just anticipate a retest. Same applies here. It gets broken, anticipate a retest. So you can see, as long as your price is creating higher highs and higher lows, you should know that is an uptrend. So as long as you've got confluence of a bias, like I always say, it's a bit easier to come up with a setup. So let's see if there's any information before we switch to the chart. The illustration above shows how the previous swing point acts as a support level after the breakout. When the market makes the retracement move, it respects the previous swing point, which is the support level, which will represent the beginning of another impulsive move. As you can see, when the market tests the previous swing point support level, it goes up again. By drawing a support level in an uptrend market, we can predict when the next impulsive move will take place. So this one is a downtrend, but I'll just focus on this because our example today was a buy. So as you can see, this is a chart. If you watched yesterday's video, you see the buy we had from yesterday. It was somewhere in here. So again, what you need to have is daily buyers, like where has your price been going in general. So if you look at it from the daily, like we said yesterday, we've been pushing up for the whole of the last month, right? It's a steady push up. So we've got higher highs and higher lows, right? So it's an uptrend. We agree we've got a bullish bias. So looking at this level again, price came to the same level, so these are equal lows, so that gives us a buying bias from a higher time frame. So as long as we've got a buying bias, it becomes a bit easier to come with the setup. So when you jump to each one, you'll notice that we've got this pattern here which we had yesterday. Price actually came back down to the same OB. Remember, we say sometimes price will break, sometimes it will break and it will retest. So this for me qualifies as a retest as well. So you can simply wait for price to simply come back above the OB for you to take longs. But coming to today's setup, you can see we had this push up. When I came to the charts, I simply saw we had this low and we had this high. So remember, I've got a buying bias coming from the higher time frame. So I'm looking for any reason which makes me buy. And anything in the book is, if it shows, that's what I use. So price pushed up. So You can run your fib if you're familiar with using the Fibonacci retracement. You can run your fib from this low to this high. You just drag it into the future. So if you notice here, price came, retested, right? Okay, it almost tapped the 38.2. It didn't really touch 38.2. But again, if you were listening to yesterday's session, remember we mentioned sometimes price won't get into the point of interest. It will respect something on the left. So remember, we're talking about a trend. So price is broken in structure. This was yesterday. We are having that trend. Sometimes it will be a deeper push and it will push up. But if you see your confluence forming, being caused by something familiar, you can still take the trade. So this high here, you can draw it as a zone using this whole order block. So you can see price came back into that area. Then they give this rejection here. So soon as I saw that rejection, I was like, you know what? It looks like this can be a possible short-term buy. So if you come to M15, um, it's a bit clearer here because you see this is the high we are talking about. Price broke and left an order block right after. Okay, the order block is just below the break, right? So price then retrace into that order block, which is in the same area as this what you call it resistance level, which has been broken. So a broken resistance level becomes support. So now price comes back, bounces on the same area. That's when I decided to take this buy. It was actually a late buy because when I came to the charts, or when I looked at it, it had already moved from here. So I would have taken it a bit earlier right there, but I just realized, okay, this price can still push. But at the same time, I was still open to seeing them still come and tap this order block within this particular area for a push up. So quick push up didn't really take time from our entry. I think we did not even hold for 1, 2, 3, 4. I don't think we held for more than an hour on this trade. It was just a quick trade. So I'm just going to quickly show you the results as well. Okay, so when I saw it, I quickly shared it. All right, so you can see it was a bit quick. So I saw the trade B1 continuation pattern entries at CMP, so current market price, possible TP2 21,200 if they continue to push up. So if you notice, this was the breakdown. So the daily, I had a steady uptrend, like I said. On the 4 hour, we're respecting the 2380 OB from last week. I'm going to show it to you just now. So these are all confluences. So remember, when you come in, you're not just looking for one thing. You have to build like a storyline on why you have to build your edge. Your edge has to be built before a setup becomes a high probability. So H4, we had this confluence, then H1, the imbalance I mentioned, where price could potentially still go to. That's around 25.30. And we also have a break and retest of yesterday's high around current market price, which is the current buy I have. And this is not a signal group. Some of you might think it's a signal group. This is not a signal group. It's just where we share ideas. A person is free to trade however they want to trade. So we had that. Then I'm going to quickly show you the trade. All right, there we go. So you can see the entry. Same thing, small accounts, nothing too drastic. This was the M15. You can see the entry price almost moved 100 pips. I think when we closed, we were about 13 pips away. So again, small accounts, $100, we made 78 bucks. If you are in South Africa, Namibia, that's about 1,000, what, 400 rands, depending on the rate, but it's plus or minus 1,400 rand on the trade. So it's not bad for an hour's work. Like I say, some days you make big money, some days you make small money, some days you break even, some days you have losses. So I'm just going to be showing you these examples. Let me show you the closed trade beyond profit. So you can see this is the closed trade. So we almost hit 100 pips from 2679 to 2766. So we're about 13 pips away from 100 points. So in terms of ROI, this is a good trade. So we'll see today's NFP. Maybe we might trade after NFP for those who trade currencies. If I do take a trade, I'll simply share it again. If I see something familiar or something we went through, like in the book, I'll still share with you guys. So I just thought let me do a quick recap. And today we took this example, support and resistance from the Candlestick Trading Bible. So if you haven't gone through this book, take your time, go through it. Everything you need is in this book. Everything you need, if you're not yet profitable, everything you need is in this book. After you read, just practice, put in time to practice, and wait for your edge to form. You just need a couple of confluences, and as soon as you see something familiar from the book, you can quickly take a trade. So familiarize yourself with all these candlesticks. Familiarize yourself with market structure, how the market moves, what you'll be looking for when you open your charts, and everything else will become a bit easier. So I hope this helps somebody. Enjoy the rest of your day. Good trading.